Good morning, everybody. Hello, hello, hello. Tuesday kickoff with the live stream. So sorry about my delay. Thank you guys for your patience. I know it's 11:04. I try to be prompt always. Let me know in the chat. I'm just going to pull up my chat here. If you can see me, if you can hear me, if you guys are with me, and then we're going to kick it off and have a great session today. So I think there might be a delay. Let me just make sure you guys are good here. I do see a few people on, but I don't see anything in the chat at the moment. So just send a heart emoji or some sort of emoji and just let me know you guys are with me. And I'll just start talking in the meantime. So today is Tuesday. So I know generally we hold our sessions on Monday. I've been adjusting the time frame a little bit because I've been super busy with some other events and some other group activity, as well as the applications that I've been building. So some of you guys here have, all right, so I see some messages and some emojis. Thank you for letting me know that you guys are here. And thank you for subscribing to my new applications. I want to take a quick moment and update you guys on what's been going on. So a few days ago, I launched the learning application. So the learning application is meant to be a very intuitive application to teach you guys and everybody how to understand investing better, and specifically how to use options trading in order to create ongoing income. So it starts with a little bit easier lessons. As the modules progress, it gets into more not difficult, but more specific, content with relation to specifically options and using selling puts and selling covered calls to create income on a regular basis. So that's great. And some of you guys have already subscribed. There's a 7-day free trial. There's also an annual plan for discounted rate. So the annual plan doesn't have a free trial, but if you want to check it out and see if that's something that's helpful for you, check out the monthly plan, subscribe, and you'll get the first 7 days free. And then if you don't like it, you can cancel, but I think you're going to totally dig it. And I've gotten some really good content or feedback relative to that app so far. Secondly, I am so excited that I launched the Calculators app yesterday. So this morning I had some quirks with that. So right now it's offline, or it may be showing offline to you. I'm just fixing some back-end logic, not the calculator logic, but the access. So just without boring you with technology details, and as you guys probably know, I'm not a tech expert or anything like that, but I am a really versed in options, and I'm learning technology as I go in order to really give you guys the same tools that I use. So historically, I've always used a lot of spreadsheets, but the problem with spreadsheets is they're messy. They're messy. It takes a while. You have to like manually, enter data. It's just like cumbersome and kind of like, not very easy to use on a regular basis. So a while ago, I would say probably 6 months ago, I automated the tools that I was using in more easy to follow format with APIs that actually, and if you don't know what an API is, it fetches the data for you. So you don't have to input the price. You don't have to look, input specific metrics. The calculations automatically does it for you on the fly. And it also lets you kind of like, okay, let me look at this contract, and I want to sell the put on Tesla with a $380 strike price. I'm just using this as an example. And then let me compare that to a 385 strike price. And how does that look relative to risk as well as return and that sort of thing. So it gives you all those calculations and all those adjustments to be able to do on the fly. So stay tuned for that. So this morning, after this call with this live stream, I'm going to continue to work on that, and that should be back up momentarily if it's not back up for you right now. And thank you for the subscribers and the feedback as well relative to those apps. So that's it. I'm super excited to share these tools with you because, listen, trading does not have to be hard. It can be as hard as you make it or as easy as you make it. I truly believe that when you make things easy it makes it replicatable, right? Meaning that, it's easy to do on a regular basis. It's very, very, very easy to make money in the market selling options without question. And it's harder not to lose it. So really my focus is sustainability and over the long term, not just making money this week or this month or even this year, but really for the rest of your life. And it all comes down to two basic strategies: selling a put, pick a quality stock that you like, choose a strike price at which you're okay purchasing those shares, have money on the side to be able to buy more if that stock goes down. That's super important. Position sizing is key. That's one of the mistakes people make. I was on my call yesterday. I have a live group that I work with, 10 people, and it's been great. We just finished the month of February, and one of the participants there was talking about a contract that he did, and he actually did very well, but he sold 5 contracts instead of 1 contract. And when we kind of talked through the basics of it, I think he became to understand that, maybe we don't want to do maybe we don't want to do 5 contracts. It's a lot of money, right? We can make more money when we're selling 5 contracts, but there's a lot more risk. So risk is the thing, and position sizing is one of the keys that we want to be conscious of moving forward. So I have a couple questions here. I'm going to get started on that. Let's see. So Pribre, I don't know if I'm pronouncing your name right, says, can you please talk about position sizing today? Oh my gosh, that's so awesome. As I'm talking about position sizing, I'm reading your question. I have your questions on my iPad here, so I don't miss any comments as we go in the chat. So you say, can you please talk about position sizing? How much % of capital to risk per position, and how many open positions at the same time? How many stock options at the same time? And thank you so much. So that's a great question, and I'm glad that you asked that, and let me answer that. Position sizing is key because, again, it's very easy to make money. And I'll kind of circle it back to the individual that we had yesterday. It was a great trade. It's just position sizing, could be looked at a little bit differently. So when we look at position sizing, we want to think, okay, how much money do I have in an account, right? So let me give you an example. Let's say I have $10,000 in an account. Well, I don't want to sell, let's say, $100 put. 100 times 100, I think that's 10,000. Let me just double check my math. Yeah, so 100 times 100 is 10,000. And so I don't want to sell one put with $100 strike, because if I got assigned and had to buy those shares, that's going to be my whole entire account. And I don't have any more money to do anything else, let alone any other positions, tickers, other tickers, or additional positions on this particular ticker. So you want to kind of think, okay, well, what % is key, right? So when we think about like black and white or rules of thumb or averages, where we want to start, really, it's okay to have one position in an account, one ticker rather, as long as that ticker is something that, you believe in and has a very low likelihood of going bankrupt, right? So let me give you an example. Let's say I'm trading Tesla. Tesla is probably one of my favorite all-time tickers for many, many years. And I feel comfortable. And this is, as I'm saying this, guys, you guys have to understand this and come to your own conclusions. And they might be different than mine. And that's totally okay. My conclusion is I'm very comfortable with Tesla as an example, with Elon Musk, leading the pack in that company. And I feel like that particular company has a very, very, very low likelihood of going bankrupt tomorrow. Now, it could happen, so I want to recognize that. I remember back in, I think it was like 2007, 2008, during the credit crisis. Any of you guys have been around the block for a while probably remember this as well. Lehman Brothers was a solid, rock solid banking institution that was here one day, and they were literally gone the next day. So I remember vividly. It's interesting how we remember things sometimes very vividly, like all the details. I think I was like getting dressed for work at the time, and I was I think I was in my bedroom and I had the television on, and I remember hearing how they went bankrupt, and it was such a shock because I and lots of other people didn't anticipate that. So that said, it could always happen, right? So like Like, for example, a meteor can fall from the sky and hit my, where I'm standing right now. It could happen. I can walk across the street and get hit by a car. It could happen, but the likelihood is very, very low. So when I relate that to trading, I think, okay, well, how do I feel about the likelihood of Tesla as an example? I feel like the likelihood of them becoming bankrupt tomorrow is very, very unlikely. So that said, I would be very comfortable having an account with only one ticker and not necessarily other tickers. Now, the risk is this: if they went bankrupt, I'd lose all my money. So I want to recognize that and be okay with that. See, the key to trading is this, guys. It's not that there's never any risk. There's always risk. In fact, not just with trading and with life in general. A lot of these lessons I relate trading with life because they're very congruent, right? So there's always going to be risk in trading, but what you want to do is identify the risk and then ask yourself, is that a risk that I'm willing to accept? Yes or no? So that said, I would be willing to accept, hey, I have an account and all I have in that account is Tesla. Now, that said, you have to think of, is that right for you? Most people think about diversification, like, hey, I want to have a whole bunch of different tickers, right? Because they think they're diversified, or i.e. safe, right? Diversification is not necessarily safe because oftentimes if you have a whole bunch of tickers in your account, oftentimes they're correlated, meaning that I could have Tesla and I could have maybe not even like a technology company or a car company, but maybe I have some energy stocks or some, I don't know, McDonald's or Walmart stock or whatever, Disney stock, unrelated sectors. But by and large, oftentimes, when we look at the stock market in general, oftentimes one stock goes up, they all go up, or many of them go up. They don't all go up the same, obviously, and they're going to chop around a little bit differently. But the theme is that large cap stocks, as an example, will kind of all go up together generally. So when I say that, it's important to recognize you could have a whole bunch of things, but not necessarily be diversified or safe, right? So you want to keep that in mind. The second thing that you want to keep in mind is this. You always want to have money on the side to average down your price and buy more shares if it goes lower. Not necessarily buy more shares at the market price. My preference is generally, if a ticker is going down, I'm going to use Zoom. I think you guys can all see my screen. And I'm going to use Zoom as a good example because I use this as an example in one of my videos recently. So, Zoom was kind of, sideways a bit here, chopping around. They had earnings coming up. And then what happened after earnings? They dipped down pretty significantly. And so the example that I had used previously with Zoom was selling an $80 put. So I think I talked about it like right around here when the stock was around $90, $92, somewhere in that neighborhood. And it was an $80 put. And then what happened? It gapped down and it went down even more. In fact, Zoom right now is trading at $74.57. Now, when something like that happens, and it will happen, you will be trading at some point in your journey, if you haven't already experienced this, that you will make a trade and, as an example, in this scenario, sell a put, and then the stock drops down, and then you're going to find yourself thinking, oh my gosh, what did I do? I sold an $80 put, and now the stock is at $75 or $70 or whatever that number is, right? And when that happens, if it hasn't already happened to you, you're going to have one of three choices to make. You can, number one, you can liquidate your contract, right? So I could have, let's say, bought that put back at more money than what I originally received in premium, i.e., and hence taking a realized loss on that position. Or I can get assigned the shares and then sell them after I have the shares, again, taking a realized loss on that position. So that's number one, liquidating your position and taking a loss. That's one option that you can make. The second option that you can make, the choice that you can make, is do nothing. I always say, stick your head in the sand, hope and pray that the stock goes back up. Hope and prayer is not a strategy though, guys. But that is a choice that sometimes people make. They say, okay, I'm going to get stuck with the 100 shares and now I'm just going to not do anything. You could do that. Or you can do the third option or the third choice, which is embrace the dip and buy more shares. Listen, if you like Zoom at $80 or $85, you should also like it at $75 or $70. It's the same company. It dipped down because of earnings. A lot of times people, one gentleman in another one of my groups talks about, well, why does this happen or why does that happen? It doesn't so matter what the reason is that it happens. The fact remains is that it happens. Stocks go up, stocks go down, stocks stay sideways, stocks go all over the place for a variety of reasons. In this particular case, Zoom reported their earnings. It wasn't received, and the stock dipped. That's probably the crux, the majority of the reason. But the reason doesn't matter. Like, the point is this: if it's still the same company and nothing changed fundamentally, in other words, there's not some fundamental difference in the stock today as it was yesterday, then you should still like it at $75. And when you embrace that dip, instead of being fearful or sad about that dip, you can sell another put. And what you're doing is you're taking in more money. Now, if you get assigned those shares, if the stock continues to go down, now you're buying more shares at that strike price. Now you have 100 shares here, 100 shares here, right? And now you can sell, maybe you can't sell a covered call to the higher strike price, but you can certainly sell a covered call most likely to the lower strike price and take in more money. So it's about creating and maintaining a systematic stream of income. So that's part of it. Now, getting back to the question that was asked about position sizing, so that said, we talked a little bit about, like, okay, well, I could have one thing or I can have 10 things. You really want to be able to, I would say, leg in, I'll term it that way, at least like 3 times. So for Zoom, as an example, if I bought 100 shares at 80 by resulting from that short put that I sold, and by the way, if you sell an $80 put and you get assigned, your cost basis will be adjusted for the premium that you took in on that put. So in this example that I had in the video, I had sold a put and I got paid $100, right? And it was an $80 put. So now my cost basis is not $80. It's actually $79 because it adjusts for the premium that I took in on that short put. So what does that mean? That means I can sell a $79 put and get, and if a call rather, that means I can sell a $79 call after I get assigned those shares. And if I sell my shares at $79, I'm not taking a loss because my adjusted basis is $79. I'm selling the stock, if and when that call gets assigned, I'm selling the stock where I paid for it. So I'm not taking a loss. Here's the key, guys. It's like you want to create systematic realized gains and eliminate or really minimize realized losses. So that is like one of the key takeaways. So, and you want to be able to leg in 3 times. So now let's say if I have 100 shares with an adjusted basis of $79. Okay, well, now the stock is trading at 74. So I want to ask myself, do I have the money to sell another put? The stock is down. Today is up 2%, by the way, but it's down from originally when it was at $80 or $83 in that neighborhood. I can sell another put, let's say, I don't know, maybe a $74 put. Now that does a couple things. That brings in more income to me for selling that put. And if I was to get assigned, it will bring down my cost basis. So that is the smarter thing to do. And then you want to be able to do that 3 times on a ticker. These are just rules of thumb, and it's going to be different for everybody depending on, how much money you have or, how many positions that you have. But generally speaking, I want to be able to have enough money on the side to be able to do that 3 times. So for example, let's say sell a $74 put and still have cash to be able to, if the stock continues to drop, perhaps sell a $65 put. Now I have 100 shares at 80, 100 shares at 74, and then 100 shares perhaps at 60. Now I'm setting myself up to turn a losing trade into a winning trade. And that's how you shave off your position. So hopefully that helps. And stay tuned because my calculators will help you show that. So again, historically, I have always used spreadsheets to calculate all these there's so many things to calculate on a regular basis, right? Like, what's my rate of return if I sell this 74 put? Is that a good deal? Is it not a good deal? I mean, historically, we've calculated that, with a calculator. Let's say if I, if I collect, I don't know, it's 105 bid, 142 ask. Let's say I collect $120 for selling that put, and I'm putting up $7,400, and that's my rate of return. And let's say, I know today's Tuesday, but let's say assume it's Monday, and just for simplicity of the math, if I do that every week, my annualized rate of return is this. So there's that calculation. And then, okay, well, if I bought 100 shares at $79, and then I bought another 100 shares at $74, where does that put my new average cost basis on the 200 shares? So there's lots of calculations that you do on a regular basis. And I probably make it look easy because I've been doing this for a really long time. But my calculators will help streamline that. So stay tuned for that. And again, 7-day free trial. If you like it, great. If you don't, that's cool too. And if you have feedback that you want to see something different, or if you're confused about something, always feel free to reach out via email or comments on here. I read all my comments, and I respond to most of the comments on YouTube. And I always read all my email and respond to most of those as well. Okay, so let's take a look. So Jean says, I love MU. Oh, I love MU too. Let's take a look at it together, and let me see what the rest of her message says. She says, should I buy it and sell calls, or should I sell a put at a high delta, for example, 40%? Let's look at that together. That's a really good question. And by the way, I walk through a lot of these tickers as we go. But all of these foundations, selling puts, selling covered calls, how do you look at the percentages, all these pieces that we talk about, they work for all tickers. So they work for MU, which is, $380 a share. They also work for, $10 tickers. Like the concept is still the same. The only difference is, obviously, if you have a smaller sized account, you can't trade a $300 or a $400 stock because your capital doesn't support it. That's the only difference. So just ticker selection. So if we look at MU, we're going to always start off with looking at the chart. I just want to kind of get an idea and see where it's been. And then we always want to make sure, does it offer weekly options, which it does. So we'll see that in the option chain here. March 6th is this Friday, the 13th is next Friday, etc. And now her question is, well, what should I do? Should I buy I like the stock, and this is something that many of you might be asking yourself on a regular basis. Hey, I like this ticker, I like the stock, I don't mind owning it. Should I buy the stock and sell a call, or should I sell a put? That's a great question. So let's talk through that. Now, first of all, when I noticed this initially, right now the stock is down 7.9%. So that said, this is an important key, guys. When the stock is down, particularly if it's down a lot, that means the premium on puts is higher than, let's say, what it was yesterday, because that's just the relationship between when stuff is up versus stuff is down. So when the ticker is down, put prices are more expensive, so you get paid more for the risk that you're taking. When the stock price is up, call prices are more expensive, so you get paid more for the risk that you're taking. So that said, initially I want to say, okay, well, it's probably better to look at a put, but let's talk about it more thoroughly so we make sure we go through all the pieces and you understand. Generally speaking, I usually prefer selling a put before selling a covered call. So in other words, I usually prefer selling a put, keeping my money in cash, selling a put, and only buying that stock if it goes down, over buying the shares and selling a covered call. And the reason for that is this: if I can generate cash flow off of cash, that is always going to be better than generating cash flow off of stock. Now you might be saying, why is that, Michelle? I'm going to explain to you. Now, while you hold stock, you have paper fluctuation, right? So the stock could go up. That means your account value goes up on paper. Of course, it's not a realized gain until you sell the shares, but it does go up on paper. And let's say the stock goes down, your account value goes down as well. Again, just on paper, because it's not a realized loss until you sell your shares, right? So you don't want to do that. But what if an emergency happened in my life and I had to access my capital? Well, if I bought the shares and then the stock went down and I had to access that capital, I could be at a disadvantage. It's kind of like having to sell something at the least opportune time. So that's the reason why generally I like to keep money in cash and then only buy the stock if it goes down. Also, I generally don't like to pay sticker price for things. So if I was to, let's say, buy the shares now and then sell a covered call against it, that means I'm going to pay retail price $379.46 or $379.38. I prefer to get a discount. Like when I buy a car, I don't go to the dealership and pay the MSRP sticker price. I want to talk to the salesman and get a deal, right? So that's another reason why. So I would, and then I would also kind of like walk through the calculations. Now I'm kind of bummed, I was working diligently. It's funny, I'm in California and I get up super early, probably about 6:30 in the morning. And this morning, like I said, I kind of hit that snag with my app, and I'm not seeing the live data feed. So I can't show you on the app, but I'm going to show you just using the calculator. And my next live stream, I'm certain that the app will have its quirk corrected, and then I can show you on that as well. And I did show you in the video yesterday and the day before. I think I showed you how easy that is to use. So if you haven't had a moment to check that out, you should really do so. But let's take a look at and see right now, because now the stock, as I'm talking, is down 8%, right? So let's look at the strike prices. So again, the strikes are down the middle, right? The puts are all on the right-hand side. And then I want to kind of take a look and see, okay, at what price am I okay buying those shares? So you want to really like think about that, and you want to think ahead of time. You want to kind of think through, okay, I'll give you an example. Let's say I sold a $350 put. Now the stock right now is at $378, right? So it'd have to drop a lot more in addition to the already 8% drop. But I want to think ahead of time, how would I feel if I buy 100 shares at $350 and it continued to drop? So you want to like really go through those mental images and mental thoughts in your head beforehand. And then you want to choose a strike based on that. And then you want to, of course, calculate your rate of return, make sure it's an acceptable thing. Right now, the volatility is super high. So that's something that you want to keep in mind. You want to see perhaps it's possible MU earnings. I don't know when their earnings are next, but we're just going to take a look at our friend Google and see if he can tell us or she can tell us. So MU next earnings date. Let's see. So it was in December, but when's the next one? MU next earnings. So it could be that the volatility is higher because of upcoming earnings. March 18th, not super close because today's the 3rd, so 15 days away, but at close enough where your volatility might be a little bit higher. So you want to go through that, and then you also want to say, okay, well, again, it's down 8%. I really like the stock. It could be that you feel like, okay, this is a great time to buy it. Let me buy it at $379.39 and let me sell a $380 put. I mean, how much money would I make if I do that? Oh my gosh, I would make $1,145. Last traded at $1,180. You guys see my screen, right? $1,145 bid, $1,200 ask. So you could do that. So you want to calculate the put side, you want to calculate the call side, and then you want to kind of think through, like, where's my comfort factor, right? How do I feel about, let's say, let's just do it quick together. Let's say if I made it last traded at $1,175, right? Let's say I made $1,175 and I put up $37,900 because I'd be buying 100 shares at $379 and change. Well, oh my gosh, I'm making 3% for the week, actually 4 days. I mean, if I calculate this out, divide by 4 times 252, I'm making almost 200% on my money. So you might want to do that. But me personally, I would probably sell a put, but it's up to you. Good question. I appreciate that. Gene, thank you for that. Let's see. Oh, and by the way, because Gene also said, should I sell a high delta put? So let me just kind of walk through that before we hop over to something next. So again, the stock price is at $379. Let's say I sold, she said around 40% put. Well, that's going for last trade $875. I think, yeah, $875. So if I'm making $875, right, and I'm putting up, let's see, what was that? That was the $372.50, $250 in capital. Well, now I'm making 2.3% again for 4 days divided by 4 times 252. I'm still making almost 150% of my money. So I would encourage you guys not to be greedy in the sense like, okay, well, 200% is way better than 150. So let me buy the shares and sell a call. I would encourage you guys to think from a risk perspective and a capital preservation perspective. You know, me personally, if I was looking at that trade, I would sell the put instead of buying the shares and selling the call. So hopefully that helps. Let's see. You guys have really good questions. Is today a day to sell cash secured puts? Listen, every day is a day to sell a put or a call. I get this question a lot about timing. What day do you put a trade in? What time do you put a trade in? How does that all work? I put trades in when it fits with my lifestyle. Lately, I'll be honest with you, I haven't been trading at all because I have been hyper vigilantly focused on finishing my apps, which, by the way, is no small feat. I'm not saying this to brag. I'm saying this because, I got tired of using spreadsheets, and then it becomes cumbersome. And then I go to the marketplace to try to buy what I'm looking for, and I couldn't find what I was looking for. Like I didn't see it. Maybe it exists and I just didn't see it for some reason. I tend to think that if I didn't see it after a lot of diligence looking, it's not there. So I said, okay, well, if I want something and I can't go get it, I'm going to create it. So that's what I've been doing. And that is no small feat. I'm not a programmer by trade. But I know what I'm looking for because I know what I've used for the past 20 years, and that's what I created for myself, and then flipping that over for public use is a whole new ball of wax, I guess you might say. All my apps were working, and then I flipped on this calculator page yesterday to make it public, and then I had some gating issues where I had a whole bunch of subscribers this morning who actually didn't come through Stripe. So I use Stripe as like the gating, where you have to put your credentials in, and again, it's free for the first 7 days, but I need to be able to see that. You need to have some sort of account. So that's what wasn't working this morning. So all the stuff works, but now it's this gating issue that I'm solving. So anyway, my point is, I forget where my point was. What was I? Oh, my point was this: any day is a day when it fits with your lifestyle. So me, I'm not trading the past little bit of time because I look at things like, I don't want to do 10 things half-assed, right? Like I don't want to do 10 things and maybe like some of it's kind of good, but not that great. I've been talking about these apps. I started these applications like actually a couple of years ago, paying programmers to do it. And that did not work because they were not understanding what I was looking for. They were just churning my money, and it was a waste of money on my end. So that's why I said, you know what, if I can't find it in the marketplace and pay for it, if I can't pay somebody to build it for me, I'm going to build it myself. So that's where I'm at right now. And that's what I've done, actually. And it's done. And I'm just working out these kinks. So any day is a good day to sell a put. But when the stock more, so that's better day. And when the stock is up, you get paid more on selling calls. So that's a better day. So you want to keep that in mind. A lot of these things might sound confusing at first. It's like anything else. It's just replication, repetition and practice. Just like anything, you're learning a new language. You want to learn Spanish, you got to practice it. Otherwise, you're not going to be that good or not that fluent. This is the same thing. Let's see. So any update on SG Sweet Green? So Sweet Green, I did a video on that as well recently. Let me just pull that up and we can take a look. So here's our chart. Gaps are something that I particularly like. Goes down. And by the way, I know most of you guys probably know this, but for those of you who may not recognize it, I do lots of videos on YouTube, one video a day. I've been doing one video a day for I don't even know, I think 7 months now, with the exception of 10 days. A few weeks ago, I took a little bit of a hiatus to kind of clear my head and reset. But one video a day. And in doing that, what I'm trying to do is give you guys all the content and as much content as possible to be successful. I have paid programs, but I also want to use YouTube as hey, I want to help people first identify that options trading can lead to an amazing whole different lifestyle that probably you didn't ever even think that could be available, and then help you accomplish that. So in doing that, these daily videos, I try to do lots of different videos. I know users out there and viewers, we have a bunch of viewers on now, and then we have a lot of viewers that watch the recordings afterward. You're all in different boats. Some of you are younger, some of you are older, some of you are like middle-aged, some of you are working, some of you are not working, some of you have big accounts, some of you have small accounts. So I try to do videos to kind of like show you all these different scenarios, so it can apply to all of you and not just one niche of population, right? So I personally did not trade Sweet Green. It was just an example. So, but let's take a look at that. I don't even remember what the video was. I think it was selling a put on it. But looking at this, I mean, it's kind of sideways. It's a very inexpensive stock. I eat at Sweet Green a lot. I'm in Los Angeles, and I was in New York for a while as well. I don't know where you are geographically. I think Sweet Green is more of a geographic. Tons of them in New York City, tons of them in Los Angeles. They're everywhere. Sometimes you have them like, I don't know, a couple within a few different block radius. And I like their food. Now, when the ticker becomes low, low dollar value, like for example, right now it's $5.48 per share. See how the $5 strike price for Friday has no bid, zero bid, $5 ask. Those are hard to get into. So as a ticker drops, and depending on the price, someone else was talking about, I think Soxol the other day, or SOXS, one of those leveraged ETFs, which has its own sort of risk profile, but it was similar. It was like a dollar stock. So sometimes people bring up, lower dollar tickers. You want to be conscious of that. So you can't get any money for a $5. So you might have to go out a little bit. Like let's say next Friday, $10 bid, $20 ask. So you want to ask yourself, do I want to go out a little bit longer of a time frame? Is this the right stock that fits my account? I encourage, especially new traders, start with something that's inexpensive. If you're brand new at trading, even if you have, let's say, a couple $100,000 in an account, you might not want to, let's say, go all in and sell a put on Tesla, a $400 stock. You might want to start with, if you make a mistake entering the trade, if you don't know exactly what you're doing, you're not going to get hurt that bad, right? Because it's a $5 stock and not a $500 stock. So keep that in mind. Also, I have my Monday group. My Monday group is small, but if you're interested, we go through all these specifics, and it's a great group. And we go through detailed, like you can share your screen, I share my screen, and we kind of walk through this, not just putting the trade on, but like managing it on an ongoing basis. I don't know how long I'm going to run that for. Like right now, it's 99, and I'm not turning this into an advertisement at all, but it's relevant and it's important for some of you guys, and some of you guys I know want to hear about it. It's 99 bucks a month, and it's every single week that we meet live. I mean, the value of it is fantastic. And if you miss a session, there are recordings. So I think the link is probably on my website. I just updated my website recently to offer all of these different platforms. But that's Sweet Green. First week, great return. Then this week died out. That's what Michael says about Sweet Green. That happens. Again, that's kind of like, a lot of times people will say, and I hear it so often, like super, super often, the market is so down right now. Oh my gosh, like this is going on in the world, like US, Iran, Israel, like all these different like events, right? And sometimes we can think this time is different. The market is down now. The fact is, the market always goes through these cycles, regardless of what's going on in the world, regardless of what's going on with, the ticker's earnings or whatever. Stocks go up, stocks go down. And I think that's the missing piece that oftentimes people don't realize. Like once you recognize that and you kind of shift your thinking of, you know what, I mean, it's okay. Sweet Green was here and now it's here. That happens. That's like ABC stock, XYZ stock, all stocks go through those cycles. And that's like the mechanics of the stock market. So once you kind of recognize that and you shift your thinking a little bit, you can perhaps, embrace it. If you like Sweet Green and it went down, hey, you should like it more. Like, the one thing I always talk about, RZLT is a great example of that. I don't trade this ticker, and I hadn't, but somebody had asked me about this, and I have a couple videos on YouTube about this. Somebody had asked me about here. They were talking about selling puts, and then what happened? The stock dropped from 10 bucks a share to $1. Again, there's three choices that you can do. if you're already in that stock, you should be committed. It's kind of like marriage, right? Like you decide to get married to somebody, and I don't know, something happens, and then you like jet, right? I mean, you're in a commitment. Not to say that divorce is bad because I'm divorced. Hey, that's kind of funny. But what I'm saying is recognize the commitment and just think through that before, let's say, you bail. So you buy RZLT at $10 and it drops to $1. Why would you sell your shares and then take that $900 loss? If you already like the stock, commit a little bit more and then average down your cost. So I'm not saying go out and buy some RZLT. I'm just saying, like, for any ticker, those are the terms in which you want to think through those details. Let me take a look. I have a lot of questions in here. All right. So Sandy says, what do you think about COYY? I don't know. Let's take a look together. So COYY, not sure what this ticker is. It doesn't sound familiar to me. And by the way, it's interesting. I did a video not long ago on an ETF that somebody had talked about, and I think I mentioned in the video, I wasn't familiar with that. And I got a stern email from a viewer that said, how can you be trading for 20 or 30 years and you never heard of that ticker? Listen, I don't know how many tickers there are. How many, let's see, how many stock tickers are there? I don't know, 12,000 or 58,000 active stock tickers in the US, more than 12,000 publicly traded. There's lots of tickers. So ETFs are there. How many ETFs are there? 4,500 and over 12,000 worldwide. Yeah, I've been doing this for a long time. But first of all, number one, I generally trade the same tickers over and over again, number one. And number two, there's lots to choose from. I thought that email was interesting. I was appreciative that he sent me the feedback because I always welcome feedback, whether it's good or bad, because it helps me, like, first of all, think. Like, listen, I'm not a guru, first of all. I'm not some savant, right? I'm just a regular person. I haven't even taken a shower yet. I'm kind of like in my pajamas with a sweatshirt on at 11:46 in the morning in Los Angeles, trying to help people be successful. And in doing that, I don't know all things. And so yeah, there's that. I feel like I got off on the tangent. Let's go back to COYY. Granite Shares Yield Coin. I don't know what they are. So first thing I do is I just kind of look them up, right? So CYY, I think, was the ticker. Thank you for the hearts, by the way. I love when you guys send me emojis. Send me some more hearts. I appreciate that. Listen, I think we all have a bit of ego. I try to not have as much ego, right? Because it's not like a great thing to have ego and be pompous or cocky or something like that. But I think inherently we all have some ego. And my ego is I feel amazing when I can help people. Somebody texted me. Actually, it's interesting. I'm going to read this text to you from Anthony. He's like a guy that I met through YouTube or something, and I was teaching him how to trade, I don't know, a few months ago. It was a bit ago. And he sent me a screenshot of his here, I'll show you guys. I don't know if you guys can see it here in the camera. He sent me a screenshot of his February results. Realized gains. So realized gains is the most important thing. We don't care so much about paper fluctuation because it's not real unless you sell your position, liquidate your position. And he made $8,060.76 for the month of February in realized gains. Bravo to that. And then there was a girl, Donna, in my other group. I don't have the email in front of me, but I think it was like almost $9,000 in February as well. I guess my point is this. My ego feels so good that when you guys share your successes and share your failures too, I'm okay with that as well. But I love to hear that, hey, you listened to this, or you understood this as a result of my videos, and it helped you produce Y result. It's always your result. I'm not taking credit for your result. You're doing the work, but I'm happy to have played perhaps a part in helping you accomplish that. So yeah, so CYY, wait, why is it not? Oh, COYY, sorry about that. COYY ticker, Granite Shares Yield Boost Coin ETF. So I don't know what they are, but I'm going to go to the Granite Shares website right here just to get an idea. And it's going to, it's an ETF. So an ETF is a basket of stuff. And they are designed to generate income through options strategies, primarily by selling puts on leveraged ETFs that track the 2x coin. Okay, so a lot of these leveraged ETFs have, we don't know what under the hood, right? So regular ETFs, like let's say, I don't know, SPY, I'll use as an example. I don't particularly like SPY that much, but I'll use them as an example that they are a basket of stuff. So SPY will have, things like Apple and Nvidia and, big blue chip, high quality companies in that ETF. So it's like, okay, you have all these things and you can, like, it's transparent, you can see it. But a lot of these leveraged ETFs is not transparent. So these ETFs don't, let's say, have leveraged coin necessarily, but they have like swaps and derivatives and stuff like that you can't necessarily see. So I particularly don't really like them that much, because if I can't see it, I can't really understand it that well. So that's kind of how I look at it. First off. Second off, if we're looking at it, oh my gosh, it's come down from like just all year. A lot of times you have to be careful, like when we see a chart that looks like this, it doesn't go up at all, it just keeps going down. You want to be careful of a reverse split, particularly in the ETF space. I think it was like, I forget what that ETF provider is. There's a name for it. There was a guy at my building that used to invest MSTY. Let me see what that was. MSTY ticker. Yield Max. So Yield Max is a popular, ETF provider that, had similar charts like this. And then what happens is they did a whole bunch of reverse splits. So you don't want a reverse split. A reverse split is when, the price goes from 450, let's say, to, 2x or 3x or 10x or whatever that number is. And then you have, your number of shares adjusts in the same way. So ultimately you have the same dollar value of stock. But what happens oftentimes when a company does a reverse split, or an ETF does a reverse split, you'll see the price go from 450. Now it's, let's say, $45, right? Let's say it goes up 10x, and then it just goes right back down again. So it's not generally sustainable. So the ultimate lesson is, don't, reverse splits are bad, right? So stay away from them. Or if you are trading something and they do a reverse split, it's a very negative thing to do. So you want to be concerned with that when we look at a chart like this, number one. And number two, when we look at the options chain, it only has monthly options. I wouldn't trade that. I like stuff that has weekly options, because then you have more volume and stuff like that, right? So you kind of see like, okay, well, here's this price is at 473. The $4 put doesn't even have a bid. So zero bid, nobody's lining up to buy that. It's probably like a dog ETF. I would stay away from it. Hope that helps. All right, let's see. We're at 11:52. So my attention is to run these sessions for 45 minutes. I know I have a lot of questions that I didn't get to, and I apologize about that. I do get to as many as I can, and I think that I'm pretty sure I provide lots of color and detail on the questions. Even, let's say, when one person asks a question, it's relevant to the group, because they're usually very good questions. So that said, I'm gonna end here. But before I go, I do want you to know, stay tuned to my YouTube channel as far as the announcement for the time frame. I think what we're going to do is stick with the Tuesday at 11 o'clock for now and see how that goes. That might change. It's because previously I was having 3 different live events on Mondays. And, these live events are, I don't want to say draining in a negative way, but they take a lot of energy. They really do. I can't do 3 in a day. So that's why I had to change it from Monday. So right now it's going to be Tuesday at 11, but I'll let you know in the YouTube. So make sure you're subscribed if you have notifications on, so you'll know when these are. And if you miss one, all good, because there are recordings on my page as well. And keep the questions coming. If you want more of a, let's say, like, hey, I keep asking questions and she doesn't get to them. I get to as many as I can, like I said, but consider if it's something that's important to you, consider that Monday group. It's really good. Right now, there's only 2 people in it, honestly. So it's a very small group. I had 10 in my February group, so that was also a very small group. Not to say that it won't grow as we go, but it will stay small, or relatively small, even, as more people come in, because those groups are really meant to, like, okay, well, here's my position, here's what I have now, what do you suggest, how should I do this, or here's what happened, managing positions. So, consider that. And then in the meantime, I do want to say thank you. I want you guys to take a moment and thank yourselves for taking the time and the energy to show up here right now. Ask questions. You should thank yourself for that. There are so many people out there that talk about, like, hey, I want my life to change, or hey, I want to do this, or I want to do that one thing. And they don't actually take the action to make that happen. So you guys are here taking that action. So you should congratulate yourself. Take a moment for that. I like to celebrate myself every so often. Probably don't do that often enough. It's good. We want to be kind to ourselves, right? Oh, I love the heart emojis. Yeah, we want to be kind to ourselves, because when we're kind to ourselves, other people are kind to us. We're able to be more kinder to other people. All these things are life lessons, not just trading. It's all life stuff. So that said, thank you. I'm going to get back to fixing that calculator app. So if you're on there, thank you. And if it's not working at the moment, it will be momentarily. And if you guys have any questions along the way, reach out through YouTube, through the comments section, and feel free to send me an email alternatively as well. Thank you, and have an amazing and a blessed Tuesday. Cheers for now.